All right, so I'm going to put everything together. All right, I'm going to stack everything. Okay, how to make use of the three-step strategy. Okay, so I used the Nasdaq the other day. As you can see, I gave it to the guys. All right, on this day. Okay, we're expecting price to go up. Right, everything went successfully. We saw this tweezer over here, just waiting for the next candle to open, and then we see what will happen, because probability for it to even break is also high. So we want to see the next candle, close of the next candle after the tweezer, all right, to confirm that yes, the bulls are really in the market before we take the trade over here. And this is the end result, as you can see. Okay, this is the end result. So quickly, let me take you through how I was able to get this structure. Okay, this trade, are we getting it? Okay, so now this is what markets has been doing for some time now, as you can see. Okay, so clearly I would just like to take my uh first generation, or maybe the first phase. Okay, so I think I started with the H2. All right, yes, I think I started with the 2 hours time frame or 3 hours, any of them. So clearly from my chart, as you can see, okay, you can see that market is having coming down, okay, giving us a bearish structure. So we have our lower high, right, lower low, lower high, lower low, right, lower high, lower low, lower high, lower low over here. Are we getting it? So clearly this is our first step. Okay, now first generation, what do we look out for? We look out for market structure, and that is exactly what I did over here. Okay, that's exactly what I did over here. Okay, now it doesn't matter the time frame that you use. Okay, but one thing about me is that higher time frames are very, very good for me. Okay, when I say higher, all right, that is how do I put it? When I say higher time frame, it depends on your trading style. Okay, because my higher time frame might be your lower time frame depending on your trading style. How you getting it? Okay, so this is the time frame that I want to use. This is where I am seeing my market structure. Okay, bearish structure. Okay, so until I see a change, okay, a change of this structure, a change of this character, okay, I will not move to the second generation. So I'm still in, until there is a change, I am still in the first generation. Are we getting it? Until there is a change, I'm still in the first generation. Okay, so this is my step one, looking at the market structure. Okay, until we have what? We have change of character over here. So you can see, okay, let me delete this. All right, as you can see, price came up here, okay, forming equal highs here, came down, and then broke this, what broke this high, right, broke this high. So this is where we have the change of character. Okay, see price breaking break of structure. Okay, so this, you see price breaking this structure up. Okay, now we also found out that price broke a low. Okay, price went up to break a low, came down, then caused the break of structure over here. Okay, price went up to break this low, all right, and broke the high. Okay, the high that causes the low, price went up to break it. So we have a break of structure to the down and change of character to the upside. Okay, to confirm it the more, okay, we see another break of structure here as well. Are we getting it? So we have our what? We have our first break, okay, price, second break. Okay, so clearly it should tell you that market is likely to go up. Okay, so once you see this change of character, you know that you are what? You are in your second phase. Okay, you are in your second phase, or the second generation, as I call it. Okay, so now all that you have to do is to look for your order block. Okay, let me make the chart very neat so that you don't get confused. Okay, so now if I am using this, what if I am using this time frame? Okay, I'm going to have this block here. Okay, I'm going to have order block over here. All right, I'm going to have my order block here. All right, I'm just looking at the last bearish candle. Okay, that form before the upward move. I am going to have this here. Okay, so I can decide to go to a lower time frame to see whether I will have maybe I'll refine my order block. I'll refine my order block. So maybe I'm going to my H1. I'm going to my H1. Still, I have the same order block over here. Okay, so but let me concentrate on the second phase. So on the second phase, I am looking at things like imbalance, inducement, liquidity, and order block. I already have my order block over here. So I am looking for my inducements, all right, the minor zones that are formed above my my zone. Okay, so I already have this as my zone. So maybe I have something like this. I can have something like this, right? And this is going to be liquidity, okay? And this is going to be liquidity. So probably I want price to take this liquidity, all right, come to this zone, and then I am going to what? I am going for a buy, okay? Then I'm going for a buy. But then look at this. Look at this. Now, remember one of the rules is that what zones that have not been mitigated, okay, or first mitigations are very, very important. Now, if you look at this, okay, you realize that price went up after price breaking out of this zone. It came back to mitigate this order block. So this order block has already been mitigated. Okay, so if this order block is already mitigated, then we need to refine it, go to a lower time frame and look for an order block that has not been mitigated. Okay, so that was the reason why I went to the 50-minute time frame. Okay, so going to my 50-minute time frame, you realize that I have a block, okay, that has not been mitigated. That is the refinement. So I now come and pick this block. Okay, I now come and pick this block. And look at this. This is a perfect order block because it has what? It has how do you call it? Imbalance above it. Okay, it has imbalance above it. So I am then going to use this place as what? As my inducement, or maybe fake out zone or liquidity trap. Okay, so I'm going to have this here. Okay, expecting this zone to be taken before I enter the trade. All right, so let's go to the H1 time frame. That was the reason why I had this, just as you can see on the Telegram platform. Okay, so I'm going to take this off. I'm no more going to consider this as what? Inducement. All right, I'm going to take this off. So now I have just some small pips, or maybe I've reduced my risks. Okay, so I am going to wait for an entry over here. So I want this what? I want this zone, okay, to be broken to the downside. Then I look for an entry. Are you getting it? That is how come we're able to what? We're able to get this setup over here. That is how come we're able to get this setup over here. Now, after what? After the how do you call it? The tweezers, all right, we still want a confirmation. Okay, we still want a confirmation. So the next candle that opens was also what? A bullish candle, which gives us the confirmation, and that can be an entry with your stop loss below. Okay, with your stop loss below the zone. Are you getting it? Now you are targeting liquidity. Okay, you are targeting liquidity. So you need to make sure that where you are going, okay, or the direction you are trading to, is there liquidity at the top? If there is liquidity, then that can also be a very, very good confirmation. So we expect price to what? We expect price to rally up, okay, then maybe do anything else and then go up. So this is how come I was able to get this particular setup, and it played very, very well. Okay, so first you look for the first generation, a market structure. Are you getting it? Your market structure. Once you see a change in that structure, okay, we see a break of structure, all right, and then a shift in structure to the opposite side, okay, and maybe if there is continuous break of structures to the upside, then you know that market is about to change structure as it happened over here. Then you just mark your order block, okay, wait for liquidity traps or fake out zones to be taken out, and you mark your order block, all right, and make sure you follow all the rules, okay, all the rules and mitigated zones, order blocks, okay, maybe price moving from the order block, right? It needs to move with volume, okay? There should be shift in structure, all those rules, don't forget them. I get it. And you can have a very, very good trade setups. I get it. If you get 10 trades, all right, 6, 7 should play, and maybe 1 or 2 hits in your going into drawdown. I get it. Because it is not a perfect strategy or 100% winning rate strategy, but it's something that can put you on in this trading journey. Okay, all right.